Okay, good morning, guys. G'day, Bobby. G'day, Daniel. Sorry, mate. And we just had the mute on. So normally in the morning, the first minute or so is just mute while people come in, and then I'm sculling some coffee in the meantime. Hope we're doing well. Hope we had a good weekend, and I hope no one's loaded long, to be honest. Can you hear me loud and clear? Just need confirmation that someone type in yay or nay. Yep, maybe. Got you. Fantastic. All right, we'll get into it. So obviously, everyone's had enough time on the weekend to digest what happened on Friday night. It looks like China are raising tariffs on US goods imported to China. And then that unleashed a bit of a Twitter fury from Trump. So it's interesting the way we all obviously, we knew it was going to be a big night. I mean, you don't know exactly what's going to happen, but you're expecting something from the Fed potentially to cause a bit of havoc. Now, the US Fed, they sort of come out, they did all right. And Powell did, I think, did okay. He's talking up, supporting the market, got to do what you've got to do. And I think the market actually took that okay. It was more because China, I think they're just applying the screws by raising tariffs. And Trump was sort of it seems like that he was expecting a rate cut. That he can bully the Fed into rate cuts, but the numbers themselves, I mean, they can't factor in. It's going to be near impossible to factor in what's happening with tariffs and the trade war into their, I guess, their framework. But all they can do is go off the guidelines that's been set by them is to keep inflation in check. And you look at these certain numbers, and those certain numbers are not doing too bad. So really, there is no need, given the guidelines, to cut rates just because Trump is looking for a 2020 election. So he's come out and he's obviously talked up tariff increases, and that's just triggered the market. It looks like trade war's gone to a new level, and it's just kicked off. And the market being tentative on this sort of bounce back after the recent sell-off. We all knew that it was tentative, and the market sort of grinding higher. You know that it's tentative, and the way it sold off just shows that. So the US got smacked around. Europe didn't too bad, but I think most of the work was done on the US Open, and then they got smacked around after that. So by the time the European indices were closed, so I expected those to come under some heat. Well, they have actually. They've opened down. I think if you just quickly go to the UK, they've been smacked down. Actually, they're not open. I'm not sure. Yeah, they've all opened down. This is a DAX that's opened down from Friday night. So they're getting knocked about a bit. I expect us. We just come online. It's not quite as weak as what I thought on the SPY. 63.74. Because all the markets got knocked about, quite a bit on the open today, this morning. FX, so the yen, safe haven yen buyings increased. So the yen really gapped up on the open. The euro, continued its way higher. The pound's not too bad because the pound is sort of factors why it should be strong, which is the US dollar, and factors why it should be weaker, being the overall Brexit. Brexit is what I'm talking about. So pound, obviously gapped up as well, I think. But it's mainly the yen that we're going to keep an eye on because it's a safe haven. If it's a flight to safety, you'd see the yen just continue on up as they buy the yen, sell the dollar, and it seems to be what happened on the open. Gold spiked another, 15, $20. So that's a big spike on the open too, which we'll take a look at in a minute. But this SPY, I thought it might have opened quite a bit weaker because anyone could see the CFD prices when they open this in the morning. So this is what we have. This is the SPY Direct, and it goes off the futures price. So it doesn't open until 9:50, which is just a minute ago. But a lot of the CFDs will, I don't know how they get the price. I don't know where they derive the prices from. I guess it's weight of orders, building a market. Somehow they build a market between 8 o'clock when it opens this morning till 10 to 10. But they all gap down on the open too. I'm just seeing what's happened. So it has been a bit of a spike just because the futures haven't opened as weak as what we expected. So yeah, but either way, I think today is going to be a bit fear driven. It's got to be nervous. I expect it to be down closer to 100 now, probably on the ASX200 open, and then we'll have to see how it goes from there. I mean, right at this stage, all you can do is really set a plan, especially for intraday trading. What are you going to do? If it's going to be a buy and a pullback and it's going to be building a high low, you're going to take a bit of a nab that we're going to get a spike as we get some shorts squeezed out. But the overall tone is going to be bearish, I think, right up until what's going to be the next few days. This trade war is not going to go away anytime soon. If anything, it's probably going to kick off a bit harder. So bear that in mind if you're looking for new positions, because you're probably going to get a better price down the track, I'd suggest. Intraday trading, you do have opportunities because times like now, things will be driven by fear. It's not really, sometimes you can just completely forget about your technicals or your fundamentals. It's not driven by that right now. On the open, will be driven by fear, by your retail sellers. Anyone that's just looking at the bigger term picture, okay, it's going to be choppy and I'd rather be out, even if they have to take a hit to get out and potentially buy back at a slightly higher price. It's the fear and the risk that things are going to get worse before they get better. So I'd think, yeah, a bit of playing around on the open. So intraday, the way it's heading at the moment, it's heading south. Let's go to the 5-minute chart on the ASX. So, and we're, if you can, before it changes. So we have gapped down a bit more. So we gapped down on the open 64, another 30 points. At one stage, it was looking down about 60, 70 points on the open for the SPY anyway. So it hasn't quite, and you can say that because the CFD's got no real market to go from, they're going to squeeze the hell out of people on the downside. So anyone that's potentially looking to buy there, they're getting squeezed out just to target some levels. Now the ASX on the SPY, yep, that's the level I'm looking for. Potentially the next port of call on the downside is at 63.04, and we're roughly 65 points away from that now. Wouldn't suggest that we're beaten down there today, but if anything, I think today's action may just be capped at 64.03. We may chop around. If you're looking for shorts, I would be looking for a bit of a squeeze up on the open. We might get some bargain hunting on the open, and we get this next round of piling in to sell into the index once it's open at, say, 10 past 10. And we might get that lower high we can squeeze down and really put the pressure on the downside. Either way, there's always different groups of people on the open. Days like this, they'll be bargain hunting. There'll be people looking to get squeezed out. They probably did bargain hunting a while ago when we were up here, and they're getting squeezed. There's people that bought it right down when we initially got smacked, and they've been holding it through the rally, and now they're the ones getting squeezed out. So there's all these different scenarios that are going to help up in the open. I think what we can expect is volatility, a lot of volatility and chop. And if you're not in, sometimes it's best just to sit on the sidelines and watch the action play out. So we'll go to, this is the SPY. We're just going to keep an eye on that. So ideally what I'd be looking for, what am I looking for? Continuous. So I thought it was going to open somewhere around that level. So if we get some sort of pop into the close and we start to really get the market squeezing down, that's what I'd be looking for. And the good thing is, well, the thing you'd be looking for most is this sort of chop. And the longer it takes to try to go, and the bargain hunters to give it a good nudge, try to go, and then the sellers coming in. Don't forget, sellers, a lot of funds can use the sell side to try and protect if they're trying to exit some positions or whatever. If they're trying to accumulate, they might just be hedging with the futures. And if they're starting, people coming in heavy on the sell side, there's a good chance that that's just going to, that cap on the upside at 64.03 is going to be well and truly held. We're going to hold a lower high and really starting to put pressure down again. And really anyone that started to buy it through here is going to get squeezed back out, and they'll be chasing with their tail, and you're getting extra sellers going to push it down. Potentially, I wouldn't say today, but could be testing down at 63.04 in the near term. At the moment, it is heading south a bit. So, again, selling is where you want to be. The trend is down, especially in the 5 and the 30 minute, and all markets are down. So the trend is where you want to be. It's very hard to go against the trend. I've done it a lot of times and we get probably caught. I think it's a 50-50 bet with my trading sometimes to go long against a major trend. But when things spike lower and then you get this, all you're really looking for, if it does spike lower and you can press down and you get this sort of chop and you get people starting to, you want to know exactly where your risk is going to be, and you're really going to be on the toes to looking for potentially a squeeze. So if you get this spike down and then the next wave of selling can't make it to the previous low, there's a good sign that that's going to be a short-term pop. And we're going to look for that squeeze of this selling pressure down and then pop back up. And then basically any sign of weakness, again, you're out. you don't even bother mucking around, just get out, because this thing could easily roll over. Let's go to Wall Street. So this is the Dow hourly chart. So we're looking at the hourly charts across the top now. You can see it's just got smacked. It's right down in the zone now at 25.37 or 370. It's right down in that zone. It may extend. It is stretched. So for all intents and purposes, it's down on a key zone. It's key low from previous. We have got a low below that at 24.070. So it's another 300 points down from there. No reason why it can't spike down, but this could be somewhere. If you're holding short, you got lucky. You traded on Friday night. You got short in here. I know a few people that did get short through here and held it over the weekend. Some guys I follow, and they doing it right. So they're looking to close out. I mean, if you're looking at that sort of a gain, it doesn't come around often, barely ever, to be honest. And if you happen to get on board that, and let's not forget that when you're trading, if you were watching it Friday night, for a lack of a better word, the balls to actually short that when it was such a whippy market, you probably, I mean, if you normally trade on the SPY two contracts is $50 a point. That's what you normally trade. You probably couldn't have traded that on Friday night, because you're either going to have massive stops, or you've got to really lower your risk quite a bit. So your usual gain, what you get per point, is probably cut down, but you've got it on the back of volatility. So it is a lot harder to trade. And if you happen to get short there's probably going to be somewhere around here is probably the perfect zone. You're stretched into it. You're sold heavily into it. You might give it some time just to chop around, but don't forget, any market that's gone that hard down can really whip around quite hard as well. And I think there'll be a lot of people positioned short that may want to wear a bit of a bounce and take the risk that it's going to continue down. But if it does, it pops back up. And don't forget, the market's being led around by Twitter feeds and banter back and forth between China and the US. If Trump comes out and says something, boom, this market could just take off and completely squeeze out. We've seen it happen before. Remember this spike here? I think it was this spike here when the market was negative, and then boom, something happened, and then of course another tweet, bang. So, and that was primed. That was at 11:30. So that was primed on the US market open. But he could come out and say to try to build that. So what Trump tends to do, he's using his Twitter feed as trying to buoy the market. And the amount of times he's come out and said, "Oh, we're in good talks. We're having a good talk with China," and then on the flip side, he says something else, going, "Oh, we're going to raise tariffs." You go, "Well, it can't be that good," So he's really just using Twitter to try to buoy the market, in my opinion, anyway. So if he comes out and starts to get on Twitter and a bit of a rant and try to put some, right some wrongs, I guess, this market could turn around on a dime. And you just what you be wary of if you're short, great if you're long, but on the flip side, if you're trying to go long off here looking for that type of thing, it may not happen, and fear could just really drive it down. You could be, before you know it, this market will be down another 300 points. So it's tough times. But what I was trying to say with the Dow, this is an ideal place where you might start to get some reaction from the sellers. Anyone that's gone short might be looking for an area. If we start to show any form of strength, they might they cut half, or they take some sort of profit off the table, with the risk that this thing could turn quite hard, because it is well and truly extend on the downside. Now, if you go across, say, the Dow as well, the big S&P, we've got a level here. There's an extension level down to 2780, but there is a level where it's trying to react. It's washed it out, so we've already done the flush. The same as on the, we get down to 25282. So look at that flush. It's about 150 points, 130 points below where it is now. We flushed through on the open. So we opened basically 25,470 straight down to 270, say, so 200-point drop in the space of it's probably the first half an hour trade, and we bounced back, staged a bit of a bounce back. But if you can see that this is a bearish candle. It has rejected a bit there. You've got a green candle there, but it's really a narrow range candle showing indecision, in my opinion. But at the moment, if we pop out the top side at say 25,435, 440, we could be attacking. We could be going to gap close, or take out the bottom. We could be extending that low and then start to work our way down to 25,070. So I think right now a lot of players will be looking to see how it reacts at 25,370, just to see if there is some we call it action reaction higher or action lower. But at the moment, right at this stage, there's nothing to say. I mean, just because it's oversold doesn't mean a thing. This thing could just stay, get your divergence and still end up down 300 points. It doesn't matter. What we're looking at the moment is just wanting to see, and this is where price action comes to the fore, I'd suggest, is what they're doing, what the buyers and sellers are doing. What's the action and reaction between the buyers and sellers? What's the nature of the action? We're starting to get higher lows. Higher lows suggesting people are starting to step in. What kind of a move up, if it's a move up, what kind of a move up is it? Is it sharp reaction higher? Is it sort of a bit of a grind? A bit of a grind, mate, to me suggests that the sellers are taking the foot off the pedal, let it grind higher and bang on it again. So there's all this sort of stuff we've got to look at that hasn't played out yet. I think it's way too early to start jumping in long, or even jumping in short down here on the bearish case. It take a lot of effort, and I think a lot of guts to jump in short in such an extended market that can turn on a dime. I think it's just time to, these sorts of reactions, you're better off giving them a bit of time to play out to get on the right side of the market. So the S&P extended down at the low, got a further low down. The UK market, it's down on support. It is currently washing that support out, which is not such a good sign. It's extended lower. They've probably got, like I said, a bit of catch up to do. You've got a key level right up at 72.19, so you're a long way away from that. The market is extended on the downside. We could get this sort of chop over the next 5, 6, 7 hours coming into the European session, or we just keep extending lower, depending on what the Asian session does. What we do, when at 11 o'clock, I think it is an hour when they open up, in China and Japan come online, what they do really could just add to the fear and drive this market lower. Germany, this is the DAX. That's really come off that 11,850 really hard, bang down, gap down on the open today. That's, to me, just this price section here. You can see it's gap down, it's green, green, green. It's looking a bit indecisive. This could easily have another crack at these and really target those lows at 11,320. There is a gap to fill. Not all gaps will fill. It could just pop back up, grind up. We could just roll over from here, and then I don't know what the stats are with gap fills, but depending on what sort of market and climate they're into, this thing could easily just sort of pop up and then roll. Who knows? G7, yeah. Look, Bobby, I don't think it's got much to do with it at the moment. I mean, yeah, I don't know exactly what's going on there because I've sort of haven't even bothered. I'm just looking at what the news are, what charts are doing. Because at the moment, for me, I'm seeing a fear-driven market. Anyone went through what was it? Trading through, I can't remember the last big crash in 07 and 08, 09. Global financial crash, the GFC, that's what I'm looking for. Traded through the GFC. Fear drives most things. When people are looking at, locking in losses, either you give it too much room and the market gets smashed, you overreact either way. So this could be an overreaction to the downside. So I don't think, maybe it's just adding fuel to the fire, but I'm not actually up to scratch of what exactly is going on with the G7. I know there's Iran rocked up. It's like they crashed the party. Who knows? But I think a lot of it's just really got to do with the global market. We know the global economy is slowing down. We know that, okay, there ain't going to be any form of resolution soon between China and the US, and the pressure's down at the moment. So we really, Trump keeps on twittering different bits and pieces, and now he's talking about he's still putting pressure on Powell. I mean, Powell's doing his job and he's putting pressure on Powell purely because he won't do what he's told in a way, and he's like having a bit of a tanty. To me, that's what it seems like. Trump's having a bit of a tanty. He's not getting his way, and the markets are not going his way. He can't bully everything, and I think he's tried to do that with Powell. Powell's really just doing his mandate. He's doing his job, and he can't just change the dynamics of what they're meant to do because they want lower interest rates when they shouldn't be getting lower interest rates just to try to buoy the market. I mean, there's probably going to be cuts soon. If this market gets crucified, then yeah, there's going to be reasons why they need interest rate cuts. But right now, they don't have many guns. Like, what do you call it? Many bullets in the guns. They have a lot of guns, actually, but much ammunition to just go on and start randomly cutting. I think they have to let it work out a bit and then cut it, come in and smack it, and just try to get it when the market is actually getting a bit buoyant, and then hit it rather than just the market's heading south. They could hit it. They could actually do nothing, and then they've used up the ammunition, and then the market keeps heading south because it's a fear-driven market. So I think a lot of it's got to do with the climate at the moment rather than exactly what's going on. We all expected this. Everyone's had the weekend to look at the market thinking, oh, here we go, Monday's going to be a shocker, and it is opening up a bit rough. Let's just see where our market is in a second. So yeah, that's my opinion on it all anyway. Right or wrong, what I'm looking at now is just charts where it could be some levels. Because don't forget, this is fear driven. The market, sometimes you look at what I just said before, technicals, hard to trade off the back of technicals. Um, but I think it's a lot easier trading off that than fundamentals. Fundamentals go out the window at the moment, and it may come back in. We may bounce during the end of the day. We could end up flat. We could end up down 200 and something points. We don't know yet. And I don't think that's got anything to do with fundamentals or the technicals at the moment. It's got to do with the fear driven market. How much pain can people take? How much pain are people taking? All that sort of thing. So at the moment, all you can really look for is to see what action's happening. We've got this big spike up in gold, for example. Okay, it got right up to the high, flushed out. So if you were looking to buy it, would you really want to buy it up there, especially if you're entering a position? And to me, that's a bit nuts to be buying it right up here. And they know, look, this market finished below that key high at 1534, for example. It's opened up. There's going to be a lot of stops up there, whether they're short, long. People that want to go long, and you got this reaction really spiking higher, probably on the back of a thin market and stops getting triggered, buy stops. Now, I would never trade like that. I wouldn't just leave it and forget about it, because what you're doing here, the risk, where's your risk going to be? Right down here, it's 40, 50 bucks away. If you can run risk like that, fine. I don't think that's the best way to trade on a big breakout like that. You should have traded a lot earlier than that. You should have traded with a breakout through, or potentially 1508 with a stop down there, and you're in the money now. But the market knows there's going to be stops out there for sure, whether you're short, and you just go, I'm going to have a nice wide stop because I think there's a lot more to come on the downside, big squeeze, and you've got stopped out. And that's what's triggered the market higher. And the market knows that any sort of pro that's watching it won't be buying on that sort of move. They'll be wanting to buy on confirmation that a dip is holding up, a pullback, a bit of a dip, buy into the dip, looking to buy on a rise, not buy up here, wondering if a tweet comes out and you're against you're against the, what do you call it? You're against the back. I can't remember what the word is now. You're up against it right from the start because you're bought on a stop, thin market. You're probably down slightly. You go, that's okay. My stop's down here, but you don't know. You're buying into a market that's pulling back rather than going up. And anyone that right, I guess you don't. That's just not the way you want to trade, especially this market, because, like I said, Trump could come out, tweet something, markets retrace, gold retraces down, indices retrace up, all that sort of thing. So that's your. I guess that's not your fear, or that is your fear, but that is the risk at the moment, especially in such an extended market. I mean, if it keeps going, I can understand that you've missed out on a trade, but at the same token, we're talking about risk. We shouldn't be just looking at what you could get in, because then you'd be essentially buying here is taking on too much risk, way too much in my opinion, and you're on an hourly chart, so this thing could just chop around here, pull back, retest. You might have to wear it. You might be right, but do you really want to sit that much pain when you could just watch the likelihood that this stops getting triggered and there's going to be a pullback is a lot higher than this market just going up. Does that make sense? Because we've all had 2 days to dwell on it. Pretty much the open it's 10 past 10 now. The open's done on the ASX. So people are either putting their orders, your retail's probably done their orders, or they're watching this open, really biting their fingernails to see what happens. So that's gold. Let's just go to see where the market opens actually. We've got nothing on that a bit, which is a shame. It's going to happen. We've got market down 110 at the moment. So down, we were expecting down 80, 90. It's down another 20, which was expected. That from the open today. So not looking too flash just at the moment. We've got, your banks are down to 1.5% on WBC, CBA's down nearly 2%, NAB's down nearly 2%, ANZ's down over 2.5%. So they're getting smacked around a bit. That's kind of the reaction that you would have expected. So that's probably about it. I think first and foremost, be careful today. You can see the SPY still chopping around, so maybe it's starting to put in a bit of a base. You'll see these little washouts lower, and then what I'd ideally want to see, I want to see a pullback. I want to see a rally up. I want to see if I'm going to go short. I don't want to short it here because I could get caught in a bit of a washout. I think it's a little bit too early. If this happened, if we were trading live, for example, and then the tweets come out, all that sort of thing, you get that reaction lower, then you could potentially buy in your first pullback and it pops up, or you could buy, you could sell into something like that and it could really extend because you haven't really gone through it yet. Now, the market has had a lot of time. You've had a couple of days to digest what you're going to do. If you've thought about it, if you're long, short, what are you going to do? You're going to cover, you're going to add, whatever you're going to do. You've had enough time to think about it. So going short here, I think you could get caught in the wash quite easily. We just have to market settle down, see what it does, and then you probably get that. Anyone that's been holding, say you were long, you're underwater, you're holding here. You're holding here because this could be holding up. You're taking the chance that we're going to hold up. We're going to have a bit of a retracement, and then you can get out at a better price. Now, I think we might get that retracement, say on the spot. And if we start to get some lower highs come in, those people who are holding it might just go, that's it, I'm out, I'm done. No more pressure. I can't take it anymore. I'm getting out, I'm selling, and which could drive the market for a second leg down. But at the moment, I think we're trying to put in a base. So it's a bit of a battle between buyers and sellers still at this moment, on the SPY anyway. And that will link into the ASX. If we can chop around here and start to hold and squeeze back up, just put this squeeze on a few shorts that's built up just to get into force to take cover, or take to cover and take some profit off the table. Bit of a grind up, and then we want to see what sort of action. Is it going to be more negative action, or if we spike lower, we come back into those lows and we get bought up again. So it's more of a, rather than the short-term high low, we get more of a major high low, a retest of those lows, and we start to get a deeper correction back up again. All this is yet to take place, so we have to really just keep an eye on what the market does in the next half an hour to an hour or so. Anyway, guys, I'll probably call it a day there. Any questions? Has anyone got a quick question? Has anyone say just be safe out there, be careful. If you don't have positions, just watch, I guess for now, sit on the sidelines and see how this market plays out. Give it a bit of time. That's what I'll be doing anyway. We've only got two positions, one long, one short. I think the longs just turned negative on us today, which you'd expect. There's nothing we can do about it. The market was looking great right up, and we've got this bit of banter happening Friday night. Sitting cash, great work, Daniel. There's going to be opportunity, I think, and don't be scared to take the opportunity when the market's rising, even if you don't get a better price, because what it is, it's about risk. Yeah, I will, Jane. I'll be on at 12:30 again. You're going to love my voice by the end of the day. I'll get annoyed. A lot of it will probably just go over a bit what we're talking about, but we'll look at the major charts, the daily charts, and what a bigger picture could happen. All right, guys, we'll call it a day there. I'll speak to you again if you're going to be in on 12:30. There's a live stream in a couple of hours. But thanks very much for joining me. Hopefully we'll do this again tomorrow, and hope we don't have to deal with a real volatile market on the downside. Guys, enjoy your day. Speak to you soon. Bye.